This year, we're looking at about 1.6 terawatt hours for battery demand, and energy storage is set to be over 300 gigawatt hours of that. In 2023, there were 4 Giga-Scale projects. In 2024, there were 17 of them. This year, there are 59 of them. Those 59 just alone count for 100 gigawatt hours, which is the same as the total market in 2023.
Welcome back to Rockstock Channel. It is Monday, November 10th, and we are here back with Iola Hughes of Benchmark Minerals Intelligence a week before their flagship kind of benchmark week in Los Angeles. If any of you are not yet going and you have a last minute opportunity, I would suggest that you attend that. I unfortunately, none of us will unfortunately be there this year, but in any event, Rodney has been outlier bullish on energy storage for quite some time, as you've heard on this channel. A lot of his bullishness has come from the research that Iola puts together, but we have had others on the podcast here. Vivas Kumar of Mitrachem was talking about uninterruptible power at the end of last year. And at the beginning of this year, we started with an optimistic thought, and quoted CATL's CEO, who is, I think they did an IPO talking that ESS could be 5 times as big as the EV market. I just listened to the Lithium Argentina call, and Ganfeng Xiaoshen was on that call, said his battery business is at full capacity, and he said that ESS could be as big or bigger than EV. David Deckelbaum at TD Cowen kind of pressed him as to what time frame. He said, hard to say, but within 10 years. He also talked up to our friend YJ Lee's optimistic thoughts on lithium, that heavy-duty trucks and things like boats and other applications are also going gangbusters. I'd point all of our listeners to our recent episode with Jigar Shah, the former head of the Loan Programs Office at the Department of Energy, who talked up significantly batteries. And Iola, we last met, it was in Washington at the Benchmark, Washington event, but the one big, beautiful bill hadn't yet been passed. But Tom Cotton in Arkansas, the senator, spoke on the stage and said something to the effect that, eat, sleep, and batteries were, his 3 mantras, when he was in the Army. So I'm speaking to some lobbyists and other people in Washington who are telling me that Washington not only gets critical minerals, but they get batteries, right, in the White House. And you're going to start hearing a lot more from the administration talking about batteries. And the few deals that have been announced so far, in Lithium Americas and MP and Trilogy are just the tip of the iceberg. There's going to be lots and lots of deals forthcoming. So that's exciting, including, 350 million was, I think, disclosed for Vivas's Mitrachem. So for all of this kind of just intro, the USA may be lagging in EV, but the AI arms race requires batteries, and America is going to become a player. And we're going to dig into that. And Iola has been publishing some great, charts that Rodney and Matt will dig into. But before doing that, I just want to thank again our sponsors, Lithium Royalty Corp., which is traded on the Toronto Stock Exchange, ticker symbol LIRC. Lithium Royalty holds more than 30 royalties on hard rock and brine lithium projects around the world, including Core Lithium in Australia, Sigma Lithium in Brazil, Trey Q and Mariana projects operated by Zijin and Ganfeng in Argentina. And also USCF Investments, our other sponsor, has been a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and thematic strategies such as ZSB for battery metals and USG for gold with income. To learn more, watch our inaugural episode with their CEO, John Love, right here on Rockstock Channel, and visit uscfinvestments.com. And with that, welcome back, Iola.
Thanks very much for having me, Howard, Rodney, and now Matt as well. It's always fun to join these podcasts and just kind of catch up and do a bit of a state of play of how much has changed over the last 6 months to a year. And it's always a lot, so particularly this year.
All right, take it away, Rodney.
Great. Iola, we've seen BESS increase its share in battery demand by nearly 50% between 2023 and 2025. That's your charts. You've got, BMI is estimating a 20% roughly market share in 2025. Where do you see that number by 2030?
Yeah, sure. So this year we're looking at about 1.6 terawatt hours for battery demand. And energy storage is set to be over 300 gigawatt hours of that, so comes in at around 20% market share. We do expect to see that market share continue to grow quite a bit over the next few years. So topping out to a degree at about 27% in 2028. It then does come down slightly to around 25% by 2030, really because we start to see a bit of accelerated EV uptake in some markets then, which counterbalances it. And then longer term, we're kind of set around that 25% mark. I think Howard made a good point in the intro as well, and something to really kind of highlight is that kind of change in attitude towards batteries. Historically there was such a close tie between energy storage and the renewables market, and almost like a clean agenda. And very much so, it's been decoupled from that. It's much more kind of energy security conversation. And that is really what's going to enable it to grow, particularly in the US market, um, the European market as well, and from the energy security side. And then China really is just another beast when it comes to storage right now.
Okay, so we're slightly, well, I'm slightly different. I think I had around a third by 2030, and then longer term, possibly even higher. But you're saying it's going to drift off. So
So
longer term,
yeah, I think the point to make with that as well is that if you put that in that whole piece of the pie, you've got that 25-27%. The EV market is accounting for about 65% of battery demand at that point. And then you've got other kind of applications. So it is half the size of the EV market. So that putting it in that context, it is significant. Yeah.
But I mean, what you seem to be suggesting is that the rate of growth of ESS demand is going to fall quite considerably. So what's the reason for the sort of your assumptions of the slowing rate of growth in ESS?
I mean, partly because of the larger base that you'll be coming off of, right? So, annual additions may still be getting larger, but you're growing from a much larger base, which kind of results in that bit of a slowdown in a way. It's still accelerating at a very fast rate. And I think one thing to highlight with that is the upside of that market. And you know, one thing we're obviously doing in the world of forecasting is constantly reviewing our forecasts. And of any forecast, I'd say the storage market has been the one which, even though we have historically been probably one of the most bullish out there for storage forecasts, we're still continue to see uplifts. And I think part of the reason behind that is the large scale projects that we are seeing now. So I actually pulled out a few data points because I thought would be interesting to share. So in 2023, there were 4 Giga-Scale projects that entered operation. So these are projects over 1 gigawatt hour. In 2024, there were 17 of them. This year, there are 59 of them out of the 1,800 projects that we're tracking with a operational date this year. And when we just take those 59 projects alone, because they range from 1 gigawatt hour to the largest being kind of 4 gigawatt hour plus, those 59 gigascale projects just alone count for 100 gigawatt hours, which is the same as the total market in 2023. So that's definitely something that's changing quite significantly, is just the ability to build these much bigger projects, build them much faster. And that's really what's going to push the needle, is these big projects. People talk about things like residential storage, small use cases, even kind of UPS and data centers. But what's really pushing the needle is these gigascale projects.
And these giga scale projects are primarily associated with sort of renewable energy projects.
Not necessarily, I'd say. Bit of a split. In the Chinese market, I'd say the movement has really been away from renewable paired projects and instead to a kind of a shared program. So you'll have multiple renewable assets spread around, and they'll have a centralized large scale battery, and that's really what's driving those ones. Certainly places like Australia, even Middle East, we've seen a lot of big projects there. often they are paired with renewables in those cases where there's a lot of land, particularly.
And Iola, I guess one of the things I wanted to touch base with you on is where are we in the energy storage tech advancement cycle? I mean, it seems like there've been some huge leaps forward. I think I even saw over 1,000 amp hours for one of the cells recently. Can this rate of progress continue, or are we going to see a leveling off soon?
Yeah, I think the thing with that is, we've seen such a rapid acceleration over the last few years. The industry standard kind of went from a 280 amp hour cell, which enabled you to have those typical 4 megawatt hour 20-foot containers. And then we've just seen iteration, getting as big as that BYD one recently at the 1,000 amp hour. There is a limit, right? You can't just keep making bigger cells, and you do start to run into some other issues, particularly around kind of production side, and then also potentially kind of issues with internal resistance that would lead to a decrease in cycle life. So there is a sweet spot when it comes to the cell design. Um, but ultimately, what we're going to continue to see is more the innovation around the container, more on the kind of engineering front, things like thermal management. Um, but it's been really impressive. Like when we look at the decline in system prices over the last few years, that has been much more rapid than the decline in cell prices. And cell prices have come down a lot. We've seen cell prices more than half over the last few years, but system prices have come down incredibly so, and that further enables the demand for storage. People are able to build projects in places that it wouldn't have made any economical sense a few years ago. Um, so that is really kind of bringing things down. I'd say on the flip side of that, we have seen maybe a little bit of an uptick in the LFP cell prices recently. Um, a few potential reasons for that. Obviously, some uptick in the lithium raw material prices, collaboration between cathode manufacturers in China to bring some price stability, and also just because of the strong demand signals that we are seeing from the storage side that are enabling them to push those prices up a little bit.
So, in essence, not going to see the same sort of quantum leaps we've had.
Iterative, I think, is the way forward for sure.
Right. And in terms of sodium ion, Iola, what's the state of play there?
Yeah, I mean, it's an interesting one. It's obviously so tied to where the lithium price is, and all of the excitement that we really saw back in 2022, was really on the back of those high lithium prices. I'd say earlier this year we did see a bit of a resurfacing of interest, and there are a few players who've announced, either kind of pipeline of gigafactory production or new products on the sodium ion side. But I think what it comes back to again and again is whilst LFP is where it is and where it continues to progress to, it's very hard for sodium ion to compete. We are seeing in China a few hybrid projects being deployed. So, for example, a 100 megawatt hour project, and they do 10 megawatt hours of sodium ion at the site. Um, I would say broadly the reasons for them doing that seem to be more driven by access to pilot scheme subsidies rather than direct benefits of using sodium ion. And in the same vein, semi-solid state batteries that we're seeing in China being deployed for storage. But yeah, generally where we are right now is LFP is really kind of the crown on top, comes out on top. And the one use case where we are still hearing it as a kind of strong potential is for extreme temperatures. So Lithium, for example, they're really pushing forward sodium ion as key for places like Canada for cold temperatures, the Middle East for extreme high temperatures, in Mongolia where you'd have extreme temperatures. But the reality is, LFP is very good for a lot of those applications as well.
And is it realistic for the sodium ion supply chain to ramp up? I mean, can the supply chain keep up with potential demand?
I mean, I think that's part of its issue, right? Is that it is competing with, you know, if we think about it in the realm of when LFP kind of came to dominate the space, it was competing with a much smaller market at that point. So tipping the needle from 10% market share to 50% market share in a year was actually quite achievable. But because of the size of the market, we're talking in this terawatt hour, multiple terawatt hour cell production world. Getting sodium ion up to that sort of scale is going to be very, very difficult. Um, there are certainly people working on the supply chain, and there's a lot of players even outside of China who are very keen to make sodium ion work. But a lot of those players are really going to be reliant on what happens in China um, to ultimately enable them to build up ex-China supply chains.
And Bo, if I can just switch to EV sales, are we on track for a decent 2025? And the split between pure BEV and plug-in hybrid, is that going as expected?
Yeah, so it's been I'd say it's been a very mixed year when it comes to different regions. So globally, we're up about 26% year to date, which I think is a very strong year. Um, the picture then becomes a bit different when you kind of look inside. So China's up 24% year to date, with over 9 million units sold. So of course, continuing to really kind of dominate the picture. I think this year will account for well over 65% of global EV sales. Europe's had a really strong year, so we've seen strong sales in several kind of key countries. Spain basically doubled their EV penetration rate. The UK has gone from 25% to 30%, and we're expecting well over 30% growth in Europe this year. And then the US is obviously a bit more of a mixed picture. So actually, year to date, we're sat at about 11% growth, and that's following several very strong months on the back of the upcoming removal of the EV subsidy. So we saw that big pull forward of sales. We are expecting the last few months to really fall off a cliff and finish the year at about just under 10% penetration rate in North America, basically flat on last year. And then the other one, just to mention, is rest of world, which has been very strong, 50% growth so far this year, really being driven by Chinese exports, and primarily BYD being the key proponent of that. So then putting that in the global picture, we're looking at 21 million EVs sold this year, and of that, 64% will be BEV. Sorry, 66% will be BEV, which is a slight increase from last year, which was 64%. And that's really been driven by China, where we have seen a bit more of a shift towards the full electric, which is almost countering what we saw for a few years in the Chinese market. We saw kind of a rise of things like range extenders, but the BEV has come back again strong.
Right. And this year, Iola, is a shift in the regulation for Europe or EU. Do you think that the deterioration in EU government finances and the strain on auto company profitability and policy changes in the US, does that affect your longer term EV sales growth outlook?
Yeah, I mean, for sure. Maybe just talking about the European market first, and then could talk about the US, because obviously a lot being going on in the US. I think in Europe, this year has been very strong. This was the first year of the kind of stricter CO2 emission standards. Because the policy is so strong in the European market, that is the thing that we watch the closest in a way. So we are very closely monitoring the review of the 2035 internal combustion engine ban, which is coming through later this year. I think the key thing to mention with that is, we never expected 100% BEV by 2035, so there has always been some expectation for softening of that rule. And then the other thing to note is, we see kind of a mixed message coming from within Europe. So just taking as a good example, the German Chancellor, he's pushing back against the 2035 target, but at the same time, he's also increasing support for EV adoption at the country level. So there is still a strong push within individual European countries for electrification. The UK, another great example of very rapid adoption that we are seeing. Um, So generally, I think the the European market is much more kind of progressed to its path to electrification than in the US, where really you're in a much more kind of early adopter scenario when it comes to the US, um, and now kind of looks likely to stay in that way for a while. Um, on that as well, for the US market, if we look at just our kind of 2030 target, a year ago we were forecasting 35% EV penetration, so BEV or plug-in hybrid by 2030. We're now forecasting 12%. So that's the sort of cuts that we are making to our forecast, and I think that's really important as well to highlight in the context of the storage market and why there is so much attention being put onto the storage market in the US, particularly from the Korean manufacturers who, have set up or have committed huge amount of investments to that market, to the US market based on high EV sales. And the reality is that that's not going to materialize now. They need their batteries to go somewhere else. And, ultimately the storage market is that avenue.
Can I ask a little bit about the Chinese market? Because obviously the largest EV market, that's gone gangbusters the last 2 years off the back of the scrappage schemes. Hearing that they may be sort of pulling back a little bit from the scrappage schemes. So what's your outlook for the Chinese EV market in the next couple of years?
Yeah, I mean, I'd still say very strong. I think the key thing to know when it comes to China is they are moving over, I guess, to a less kind of subsidy driven market, to a more kind of natural demand driven by things like the economics. So that's a really big one. Is in the Chinese market now. When we look at ICE versus EV parity in China, you're looking at 4% cheaper for an EV. You compare that to the European market, where it's 80% more expensive to buy an EV, or the US market, where it's 50% more expensive to buy an EV. That's just a huge kind of barrier that's blocking adoption outside of China. So that's a really a big one. There's still, I think, in the most recent kind of 5-year plan documents, there was maybe a bit of concern about the lack of mention around the automotive markets. But when we kind of had a bit of a closer look at it, it was clear that this does continue to be kind of a key pillar of the economy, and potentially a kind of shift towards encouraging wider automotive uptake. So, vehicle ownership in China is still incredibly low compared to the European market or the US market. So there is really a lot of upside, I'd say, in China as well, if more individuals just buy cars in the first place, because ultimately they will very likely be EVs. So yeah, I'd say the Chinese market continues to be very strong.
Um, I have a question as well, but before doing that, I'd like to thank again our sponsor, USCF Investments, who've been making it easier to get exposure to commodities investments for almost 20 years. USCF's Sustainable Battery Metals Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And thanks as well to Lithium Royalty Corp, which just published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter, which included first royalty payment from their 3Q project operated by Zijin Mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X at lithium_royalty. Iola, you were mentioning just in the U.S., I visited a conference actually with Jigar Shah, which for this distributed energy DER, distributed energy resources conference. And there was a guy from LG Energy Solutions talking about their plant in America and how that plant has pivoted very significantly from making batteries for EVs to making batteries for ESS. He said, like, originally they had planned, I think, for 4 gigawatt hours, then it's turned to 16, then 20 to 30. I don't remember exactly the numbers, but Could you, I guess, just discuss that dynamic either at LG or in the US generally with all of like SK and all these factories that were announced a few years ago? Yeah, what's going on there?
Yeah, yeah. I mean, there's been a really dramatic shift, and I think it's a really big positive for the storage market when the bill was first announced and introduced these stricter rules around material sourcing and where the batteries are coming from. There was a lot of concern that we would hit 2028 and no one would be able to build a project in the US that would be eligible for the investment tax credit, and therefore it would kill energy storage demand. And then, since then, we've seen a whole flurry of announcements. We've seen obviously the ones you mentioned from LG, which are very significant. We've now seen Samsung announcing significant facilities, both in terms of they already have some NCA lines that they have for energy storage, and then a number of LFP lines. We recently saw the Samsung Stellantis joint venture in Canada, which obviously was intended for the EV market, has now come out and said, no, we're going to do energy storage instead. You've got SK Battery Americas, their Georgia facility, which again, committing to energy storage market instead. So there's this whole host of players that are very much, committing themselves to energy storage. And it was really interesting. We hosted an event in Ohio a few weeks ago, and we had a speaker from Samsung and LG there, and they would been at our event that we did a year ago as well. And a year ago, they got up and they spoke about the EV market and battery demand from the EV market. And I don't think they mentioned energy storage once. And then this year they got up and I think they spent about a minute on the EV market and then spoke entirely about energy storage. So there's been a huge pivot in strategy from these Korean cell manufacturers within the US market. And that's really key when you look at the battery demand split within the US as well. Every time we cut our EV forecast and those expectations go down, the importance of storage is really more and more pressing for those players.
Who are their customers now? Is it the utilities? Is it the hyperscalers like Google and Meta and like what? How have they
Yes.
redirected that?
So they work in kind of two ways. Either kind of uh, selling their cells, and then that will go to an integrator. So Tesla, Fluence, those kind of the two biggest ones in the US market. Or they produce their own systems and then sell these directly to developers, to utilities, to data centers, for example. So, you know, Tesla has recently announced a big offtake with LG for energy storage cells. Right now, Tesla uses a mix of CATL, BYD in China, and also Eve Energy in the US, or they will be. And now they've added LG to the mix from 2027. There's also unconfirmed rumors that they will be sourcing from Samsung too. But we'll have to wait and see for confirmation on that. But there is a huge amount of demand for domestic cells, not just because of the kind of headline investment tax credit foreign entity rules, but also because of something called the domestic content adder, which is a 10% bonus on the 30% tax credit if you source a certain amount of your material from a domestic manufacturer.
Okay, great. And Iola, you had a slide. You just run through what that slide says.
Yeah, sure. So one thing that some of the team do here is just track basically investment or funding going into various different markets of the energy transition. And I believe year to date we tracked over $50 billion dollars of investment going into various different parts of the energy transition, in specific the battery space. And of that, the energy storage market was the kind of biggest winner, where we were seeing an incredible number of deals flowing towards. Some of these have been really significant. I think one of the biggest ones on the storage side, it's a company called Base Power, who are looking to do kind of residential battery storage. Um, but yeah, basically they're just kind of demonstrating how much money is kind of flowing into this market across the board. I think some of the other big ones that we pulled out, over $1 billion investment going to Move, which is a Nigerian autonomous driving company. Over $1 billion to Lucid. Robotics companies also coming in there, human robots that is. So several really kind of large companies continuing to see a significant amount of investment flowing into their industries.
Are these just announcements or are these actually commitments? Because we've had a lot of those announcements that like Ford and GM have since scaled back.
Yeah, I think these will just be announcements in general, and yeah, I mean that's a really great point to bring up in the context of the US market, the demand picture more broadly is the amount of pullbacks we've seen as well from particularly US OEMs and cell manufacturers. Um, and that really kind of feeds into why our EV forecast keeps being cut. A lot of the more affordable models, which were really planned for the US market, and the kind of large scale up of production, has been delayed, has been pushed back, and really that does mean the market is going to continue to suffer and stay at quite a low penetration rate for a while.
Iola, the one thing I wanted to touch on that topic is the introduction of the Robo-Taxi and how that will affect EV sales forecast. Is it sort of a niche product with limited global potential, or can this make it, between that Waymo and other things coming in, can that turn things around a bit in the US?
Yeah, I think it's one of those. It's still a bit of a question mark around how much uptake we're expecting there. Um, I think ultimately it's going to come down to a price factor and a convenience factor. I think there's so much, probably way more so in the US market than in the European market, where vehicle ownership um, is much more highly prized. People in Europe tend to be, I guess, less fixed on owning a car than in the US slightly. So the idea of getting your average American to move away from owning their own vehicle and moving to a method where you know they instead have to kind of dial up and the vehicle arrives is still a bit of a question mark in terms of where that goes. Um, some potential impacts to the total vehicle market as well, but again, that comes down to that kind of price point of where we're at, and also the really kind of the balance between things like the robo taxi versus just calling an Uber. It's that what is the I guess key benefit that you get from that versus kind of traditional methods that exist today. In terms of kind of global potential, it seems like Europe is still a bit slower to get approval. Um, However, we do have Waymo coming to London next year, so that potentially will set some of the groundworks to making it a lot more feasible. And then China's another one where I think Tesla has faced a few difficulties around the kind of data sharing, um, and it really is unclear whether that will be at the same level as what we're seeing in the US market. So it does very much seem like it is going to be centered around the US market, at least to start with.
Iola, can I come back on maybe some of the sort of commodity sort of implications? I went to the benchmark presentation at LME Week, which was really good turnout from your analysts and really interesting sort of take on the space. And one of the things that came out for me very much from that was that you're pretty bullish on ESS and you're pretty bullish on EVs, but you're not that bullish on the lithium price. So can you just give us a little bit of a few thoughts about that?
I mean, so I'm not too close to the lithium price forecasting, so I
Yeah.
can't comment too broadly on that. But I think it ultimately just comes down to the supply picture, which there continues to still be um, quite a lot of supply in the market, and also the ability for Chinese players to operate at potential losses does continue to be about a bit of a barrier to any significant price rises. Um, I think we are forecasting price recovery kind of from 27, based on kind of our most recent Q3 forecast that would be. But yeah, ultimately it just comes down to that supply demand balance in particular.
And I guess the final question from me is: do you have drones and humanoid robots in your demand forecast, or are they so small as to be irrelevant?
Yeah, so it is something that we track quite closely, and we actually have a non-road mobile machinery report, which essentially covers any sort of device which falls outside the typical EV markets. Um, it is still a bit of a niche, I'd say, in terms of battery demands. Humanoid robots is one which we are paying a bit more attention to. But still, it is typically gonna it's not gonna really kind of push the needle in terms of that overall battery demand picture. Similar with drones, I think drones is an interesting one where we're seeing it as really a opportunity to try out new technologies. So lots of things like solid state and silicon is being explored in the drone market because of some of those um, lightweight requirements that you want for those vehicles. Um, but yeah, not really kind of pushing the needle in terms of battery demand.
Okay. And can I just ask about sort of commercial vehicles? Obviously, YJ Lee, who's a key contributor on this channel and everything, is very, very bullish about commercial vehicles. Um, what are you guys seeing? I mean, obviously, you're covering it more closely than we are. You're covering it on a global basis, not just individual countries. What are you seeing really in the market at the moment?
I think, I mean, ultimately, it's still very much a China story, particularly on those heavier duty vehicles. It's really interesting. We've seen really incredibly strong growth over the last couple of years, and a lot of those vehicles that are coming through are battery swapping heavy duty vehicles, which is not really been adopted anywhere apart from China. Um, so that does make you kind of question whether that's an opportunity to allow ex-China markets to or heavy duty vehicles markets to electrify will be via battery swapping. But the reason that China can do that and does do that is because generally all of those batteries will come from CATL, and CATL will make the packs, and it's very unified across all of the different OEMs. I think when you move outside of the Chinese market, getting all the OEMs to design their electric vehicles based around one pack from CATL would be a lot trickier. So there is kind of that balance that has allowed it to accelerate quite quickly. Um, other markets we are expecting demand to kind of pick up, particularly places like Europe where you have policy being a key driver for things like heavy duty vehicles. Um, if I look at my just demand numbers, I don't think we see I don't think we see battery demand from the kind of commercial vehicle market. It's about 500 gigawatt hours by 2040.
Right. So it's growing, but it's not sort of shooting up.
Yep.
Just one last question from me, Iola, is we've discussed the energy storage and adjustments to the form factor and technology. On the EV side, where are we sort of relative to limits on current cathode formats and so on? Is there much more to go? Yeah, can you squeeze much more out of these packs? Where are we?
Yeah, I mean, I think I'd say we're in a very good position in terms of how good these batteries are and continue to get. I think right now there's a real balance between cost and energy density. Um, you know, if you wanted to, you could make the most energy dense, the most perfect battery ever, think solid state. But the reality is that when you then put in the cost part of that equation and the cycle life part of that equation, you start to lose some of those benefits. That the reality is that a lot of these batteries that we see even on the road today are more than good enough for your typical owner of an EV, particularly when we start to bring in some of the fast charging elements that we're seeing recently. So, some of those LFP batteries in China that are capable of doing kind of 8 to 10 minute fast charging, that then really kind of removes all those question marks around things like range anxiety and concerns around charging time. So I'd say the current tech is very good, and we do continue to still see incremental changes. So on the LFP side, the real push is around higher generations, which is ultimately tied to compaction density. And what that does is it helps boost the energy density of LFP. Um, there's a few players who are kind of continuing to kind of come through with the higher and higher levels of that, but the reality is that state of the art today is very good for a lot of applications. And then on the nickel based side, we do continue to see advancements there. Things like, instead of your 811s going to your 9.5.5, so pushing to higher nickel and ultimately higher energy density with that. Um, the other kind of interesting one on the nickel side, I guess, at the moment is around high voltage mid nickel. So kind of a bit of a step back, but that enables you to get some of those faster charging speeds again. So that's definitely a big focus at the moment, is improving charging speed, because the battery in itself is getting to a very good state.
How viable is it to expect LFP, highly chargeable LFP or fast charging LFP to be exported? Because that's the later generations of LFP, and the Chinese government seems a bit wary about letting that out of the country.
Yeah, definitely. I mean, that was an interesting one on the recent export bans. Obviously, on the battery level, there were some restrictions, but that was really targeting. So I think it was over 300 watt hours per kilogram, which would be the sort of battery you'd see going into a drone, for example, using silicon. Um, but then on the cathode side, you had the LFP from quite a low generation being targeted. I think the important thing with those export bans is that they're not bans, they're licensing requirements. Um, and the reality is that, you know, China wants its batteries and its technology to be used on a global scale because it is increasingly reliant on export markets. So if Ford CATL, for example, are building a gigafactory in the US, the idea that the Chinese government would stop CATL having the best technology, or even one of the latest generations of technology for that facility, I think is relatively unlikely. Um, So I think it's just a really kind of a tightening of approval process, and also just, quite a lot of kind of political movement there, with everything going on around tariffs and the back and forth that we are seeing.
My last two questions are related actually to that, Iola. I think just energy storage is much harder to forecast, I think, than the EV market. We've talked about, many times. So I see potential for upside surprises within the energy storage market. And those surprises, I think, can be coming from the US, because the US, we're in this kind of AI arms race. But so far, the Trump administration has talked about, largely nuclear and gas, and they haven't yet said batteries too much. But as I said earlier, I think that's coming. Uh, Companies like NextEra Energy, which do natural gas, which do nuclear, it's basically to say the fastest is, and the cheapest is renewable, so it's battery. So it is, as I think you said, it's not a clean energy argument anymore. It's an energy security, argument. So I guess, how do you see the geopolitics of this playing out? And, uh, how would you think about the potential for upside surprises, coming from the US, from an AI arms race catch up dynamic?
Yeah. Um, I mean, we recently saw the FERC proposal from Chris Wright, which I think is a good indicator of maybe where the market is going, which really look to promote accessibility to the grid, the speed to bring projects through. And even if it maybe wasn't explicitly mentioned as batteries being the answer here, I think it's very clear that batteries were going to be a key part of that. And we've seen examples of data centers that the XAI Colossus projects, for example, they use megapacks to kind of help them get their load whilst they were waiting for gas generators to come in. We've seen other data centers kind of commit how important they see batteries, and also the number of different applications they see within data centers where batteries could potentially fit in. So I think that side of it is strong. I think there's still quite a lot of question marks around supply chain. Um, we've seen this big rush of Korean cell manufacturers shift and pivot to producing LFP. Um, from next year, the rules on 45X, the production tax credit for cells and packs is tightening, you need to suddenly look at where your cathode and where your anode is coming from. If we look at those parts of the supply chain, particularly for LFP, the dominance of China is incredibly high. And realistically, it's going to be very difficult for someone making LFP in the US market to qualify for 45X in the coming years. So unless there's a kind of movement in that midstream part of the supply chain, which, maybe we are seeing with the likes of Mitrochem getting that significant investment, that's something which I think is maybe being overlooked still somewhat, is, okay, we can build the cells, but what about the cathode and what about the anode?
So the warp speed for critical minerals, which definitely seems underway, needs to be augmented with a warp speed for the midstream, which I think this administration gets it, and I'm hopeful to see that. And any opinion on the prospects of just reading the tea leaves of China and the U.S. meeting, last week? The prospect of some sort of grand bargain. You mentioned, like, if CATL were to build batteries in America, it would be their highest, most modern, generation. Do you see that happening, or BYD or Ganfeng being welcome to build plants here sometime?
Yeah, I mean, I think there's definitely potential there, and I think that's something which is also a concern for players in the midstream. Again, it comes back to this midstream. So I think that is the most important story right now. Is people who are looking to build out cathode, build out anode, they're definitely in a position where they're concerned that, like, okay, but what happens if one day Trump turns around and goes, you guys can come and build a facility here. You have to follow our rules, and maybe there'll have to be some tech transfer, but it does make it very hard for people to kind of proceed when there is uncertainty around how that is going to play out over the next few years. So yeah, I think there is definitely potential for Chinese players to come in under what terms it will be. Taking the Chinese playbook of the automotive industry from 20 years ago and flipping on its head, I don't think is necessarily a bad idea.
Fully agree with that. And as I said in my latest Lithium Bowl, which for all of our viewers, if you want to download that, please visit rkequity.com. But, the Republicans didn't do so well in the most recent elections, but the midterms next year are very significant. And I could see a dynamic at play where we resolve a lot of this uncertainty, tariff, China, U.S., and, hug it out, with Xi, and let's compete, and solve these issues and catch up. But, we don't want to go to war, and trade war is not good. Anyway, that's just my 2 cents, which I'll continue to reiterate. Grand bargain 2026, supporting, commodity super cycle across a lot of materials. Iola, thanks. So is there anything that we should have asked, or anything about, like, next week's benchmark week that you'd like to flag in particular?
No, I don't think so. Yeah, it should be a good event. I think there's been a lot of change on the policy front over the last, even since the event in DC. So it's just gonna be really good to get in the room and see how everyone's attitudes have kind of developed over the last few months.
Sounds good. Maybe we'll chime in again after the event with you or some of your colleagues just to get a debrief, because unfortunately, yeah, not making it this year. Okay. Thanks, Iola.
Great, thank you.